How do you suggest we start to fix the problem for the average customer or prospect?
Yeah, I think that's a great question. I think that it begins with an acknowledgement that there's no silver bullet when it comes to fixing the problem. I like to say often that you need a comprehensive approach that takes advantage of every nook and cranny in the IRS tax code. And I typically can recommend to my clients as many as 6 different streams of tax-free income, none of which show up on the IRS's radar, but all of which contribute to you being in the 0% tax bracket. The reason I may recommend as many as 6 is because each one of those streams of tax-free income has something unique about it. That it can do something that none of the other streams of tax-free income can do. I'll give you an example. The first one we love to talk about is the Roth IRA. We love Roth IRAs because not only are they tax-free, not only do they not count as provisional income, they don't count against the thresholds which cause Social Security taxation, but they're also liquid. So if you put money in, you can take it right back out. So there isn't that sensation of, hey, I'm 40 years old. I put it in. I can't touch it for 29 and a half years. I love the Roth 401k because the Roth 401k is the only one that gives you free money. It's got a company match. None of the other streams of tax-free income gives you free money. So at the very least, you should be contributing up to the match in your Roth 401k. And in today's new tax environment, you can actually have your match earmarked for the tax-free bucket if you want. So I love that. I love the Roth conversion. One of the reasons I love the Roth conversion is for somebody that has $3 million and they need to whittle that down to say 400,000 by way of a Roth conversion. Roth conversions have no limits on how much you can do. So I often use the example of Mitt Romney. He's got $100 million in his personal IRA. If I were him, his required minimum distributions are going to put him in the highest marginal tax bracket. If I were him, I would convert the entire thing all in 1 year prior to 2026. He can do that because Roth conversions have no income limitations and they've got no limits. I also like to talk about how if you can, by way of the Roth conversion, you can whittle that IRA or 401k down to the ideal amount, then guess what? You can be in a position where whatever you have in your tax deferred bucket will produce an RMD that gets offset by your standard deduction. And come 2026, it's going to be your standard deduction plus your personal exemption. And that means your IRA is now tax free. And I like to, I call that the holy grail of financial planning. Why? Because you got a deduction on the front end when you put the money into the IRA, you grew it tax deferred, and then you utilize your standard deduction on the back end to offset the income coming out. I also talk about the life insurance retirement plan, which is cash value life insurance. One of the things that's great about that is, depending on the company, these companies will give you your death benefit in advance of your death for the purpose of paying for long-term care. And if you die peacefully in your sleep 30 years from now, never having needed long-term care, someone's still getting a death benefit, probably your kids or your grandkids. So there isn't that sensation of having paid for something you hope you never have to use. And the last one I talk about is tax-free Social Security. If you can keep your provisional by using these various combinations of tax-free investments that do not count as provisional income, you can stay below your provisional income thresholds, which for a single person's around 34,000, for a married couple 44,000, that would prevent 85% of your Social Security from being taxed. So if you can engineer this in just the right way, you can suppress your provisional income thresholds and then you can receive your Social Security 100% tax-free. So like I said, taking advantage of every nook and cranny in the IRS tax code in an attempt to shield yourself from the impact of higher taxes. And when you're shifting this money to tax-free, you want to do it slowly enough that you don't rise into a tax bracket that gives you heartburn, but you want to do it quickly enough that you get all the heavy lifting done before tax rates go up for good. And like I said, I think if you get it done by 2030, 2031, I think you'll be in pretty good shape.
Okay, no, perfect, perfect. I can imagine. I'm not seeing the chat yet because and you guys can ask questions, and we'll get to them when we have time here at the end. But as I can hear the questions of, okay, what does he mean by ideal? So let's go back to the traditional IRA or the 401k rollover into the traditional IRA. When you talk about shrinking it down to the ideal amount, I think what you're saying is when our system perhaps projects the RMD out of, let's say, an IRA with $400,000 in it at age 75, that distribution is going to be around the same amount as your standard marital, let's say, tax deduction. So they just cancel each other out.
Folks, my upcoming book, The Guru Gap, How America's Financial Gurus Are Leading You Astray and How to Get Back on Track, is now available for pre-order on Amazon. Take the opportunity to order your copy today. Also, in the next 10 years, I'm looking to put 1 million Americans on the road to the 0% tax bracket. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes down the road, head on over to davidmcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.